Hello and welcome to another update video on render. Here I am currently looking at the render chart on the 4-hour time frame. Just to remind you that this chart has been in a, well, let's say it's been correcting between March 2024 and April 2025. And since then, basically what we've seen is just consolidation. Okay, there was a nice and interesting 5-wave move up from the April low and a pullback which ended as a higher low in June. But I have to be very honest here, this pullback into the June lows was very, very deep. And afterwards, the rally afterwards ended as a 3-wave move up. So the only way for me to call this still something bullish, directly bullish, is to consider that this C wave up that potentially started there in June is a so-called ending diagonal structure. Why is this important? Because the wave 1 is a 3-wave move. And so I cannot call that a diagonal pattern, an impulse. I cannot call that an impulse. I can call it a diagonal structure. Now, it's important to understand that because in diagonal patterns, the subwaves are typically all corrective in nature. We're likely going to see a lot of different 3-wave patterns across the board. So that means in this move to the upside, we cannot rely on any 5-wave move. So when I would normally say I need to see a 5-wave move here, right? Yeah, to confirm it, that's true. To confirm that the uptrend is unfolding and that we have bottomed potentially in this wave too, but it's kind of low confidence. It's still a scenario to track and to go with, but it's kind of low confidence and very fragile because I need to see 5 waves to be able to confirm that the wave 2 has bottomed, but the market can just continue to move higher in corrective structures because, as you probably know, in a diagonal pattern, the subwave structures, they are all corrective in nature. We are dealing with 3-wave patterns only 3-wave patterns, only corrective patterns. So that means the third wave to the upside would likely just be an A, B, C structure. And these ABC structures, yeah, I mean, in the A wave, we could get 5 waves, but we could also just see 3 waves. So that is a little bit uncertain. However, for now, I'm working based on the assumption that the wave 2 has bottomed, especially, and I'm going to zoom in a little bit, especially as long as the market now holds above the 78.6 retracement of the last rally, small rally. So as long as we're now holding above this micro support zone, I will work based on the assumption that a third wave has begun, just because that is sort of possible. You know, we have a 3-wave move down into support, and because I see those tendencies in the entire sector. What I need further to confirm that would be a 5-wave move. It would be great if we get it. We don't have to get it. And then a break above the wave 1 high at $4.72. So yeah, and then as long as pullbacks remain corrective and stay above $3.47, $3.48, the local uptrend could continue. That's the update on render. I hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Thank you very much. Bye-bye.